and near and dear to my heart. Oh, one sec. I'm not sure. Now it's being recorded. Um, with everyone near and dear to my heart. So, as mentioned in the actual event, this is just a way for us to communicate with each other and also communicate to you guys ways to really scale your career once you break into venture, and then just to have a dialogue on whether it's technical skills or presentation skills, networking and branding. What are the best ways you can kind of continue to move forward with your career trajectory to be as successful as possible, either in a VC role or in anything else you want to do beyond this? So without further ado, I'll introduce all four of these awesome panelists really quick. Morgan is an investor at InQtel, the nonprofit strategic investor supporting the U.S. intelligence and national security community. She previously spent time at the NFL in Sikorsky, which got acquired by Lockheed Martin, graduated from Stanford with a BS in product design and MS in management science and engineering, where she was on lightweight rowing team and started Stanford Women in Design. She works with a variety of nonprofit organizations, including Black VC, EVCA, and in her free time enjoys running, rowing, playing piano, and traveling. And if you haven't already checked out her newsletter, be sure to do so because it's definitely going to be more informative than this hour event too. Solomon, who's in my top right, whose name actually switched from my name back to his, he's a vice president at March Capital. Prior to joining March, he was a principal and early member of the Tusk Venture Partners team, where he invested in early stage technology companies. And at Tusk, Solomon worked with a number of managing partners across all aspects of the business, including sourcing, due diligence, executing on transactions, and fundraising. And some of his portfolios at the time included Lemonade, which IPO'd, Bird, Sunday, Care of, which got acquired by Bayer. And prior to being at Tusk, Solomon and I had the fortune of working at Lazard Frères, where he was actually worked in their power and energy group, focused on a number of advisory assignments, and received his BS in commerce from UVA back in 2015. Outside of work, Solomon enjoys exploring new restaurants. He's an avid runner. He actually ran the 2019 NYC Marathon, qualified for Boston, but once everything comes back to normal post-COVID, you'll probably see him back on there too. I also have Alan here, who's a principal at KKR, where he joined in 2016 to launch their first growth equity fund. He leads investments across enterprise software, cybersecurity, consumer investments, and financial technology. And prior to joining KKR, was also a part of the early team and investor at Capital G, which is Google's growth fund. Started his career at Goldman doing TMT banking. Has invested in a number of different category-leading businesses, including FanDuel, CrowdStrike, Policy Genius, Zscaler, Slice, ForgeRock, Glassdoor, SurveyMonkey. I can keep going on too. But in addition to his work in technology, he's deeply engaged in supporting equity in education and healthcare. He serves on the executive committee and board of Summer Search Bay Area, an organization supporting 1,500 students, as well as on the board of World of Children, a grant writer for domestic and international children's charities. He holds a BA with honors in economics and a secondary in global health and health policy from Harvard. Jameson, who we also have here, is a partner at Base 10, a former partner at BCV, the current firm I'm at. And he leads their advancement initiative after spending 7 years at Bain Capital Ventures, leading growth investments into marketplace businesses like Cameo and Winolo, and working with leading software companies like FourKites and ShipBob, and other fintech companies like Finix and Flywire. Prior to BCV, Jameson was an early employee at Bonobos, the first digitally native men's apparel brand, building out the brand's analytical capabilities across finance, retail, and marketing. Jameson started his career as a management consultant at Bain & Co. in Boston, advising clients on growth strategy and digital transformation. Graduated from Harvard with a degree in history and literature and wrote his honors thesis on the representation of racial violence in early photography. He was named to the Forbes 30 Under 30 list in 2016 and Venture Capital's Journal Rising Stars in 2021. Currently serves on the board of Hope in a Box, which is a program that supports educators in building LGBTQ inclusive classrooms. So hopefully that provides some context with everyone. My background, I'm an associate at Bain Capital Ventures now. Previously was at a growth equity fund called Longridge and at Lazard prior to that, and graduated with a history degree from the University of Pennsylvania. So I'm excited to just dive in here, guys. And I think first and foremost, to get this going, I'd like to just open up the discussion to talking about what was kind of the original reason that you guys wanted to work in either venture or growth. And over time, what's been the reason, how has that reason kind of evolved for why you wanted to stay in the industry over time too? So I guess, Solomon, maybe since you're top left for me, I'll let you start with that question.
Yeah, I think what's interesting to me is just I come from an entrepreneurial background in terms of my parents. And I always knew just earlier stage leaner companies were more exciting. And, as you mentioned, I was at Lazard doing power and energy, and, that was a great skill set, but it's pretty far from startups. And when I was looking for the next opportunity, I was actually thinking about operating roles or investor roles, and timing just happened to work out when Tusk was launching. So I ended up joining. And what I think keeps me excited about venture is it's one of the few fields where, it pays to be intellectually curious. You're basically chasing after interesting trends and opportunities, and the formula is always changing, and to me that's pretty exciting. And it always balances the right amount of kind of analytical work with just kind of interpersonal relationships and working with founders and kind of being there as a teammate. So it just kind of molds a lot of my skill sets and preferences in terms of engaging with founders.
Mm-hmm. And Morgan, how about you?
Sure. And let me know in the chat if you guys can't hear me. My AirPods are sometimes weird. But so in terms of my background, it's a little bit atypical for venture, I would say. But I've always been interested in entrepreneurship. I did my first business, I guess you could call it, when I was probably 10 or 11. I started teaching piano and did that through college. And it was honestly an amazing experience and personal brand and trying to bring knowledge from my brain into others, and then did a variety of things through college. I would say the most formative things in me deciding to do venture were my internships during college. So the first one I did was in the biology department, didn't love it, then kind of moved into more of the engineering side, which is what I did my degrees in. So did an engineering internship, also didn't love the day-to-day. Then the next one I did was at the NFL, and I was like, oh, this is so interesting. And that's where I learned about venture. I sat next to the NFL's venture team. They actually have a small team that's focused on making investments in a variety of fields that are kind of furthering the business. So the final internship I did was at a VC fund, and I just learned I loved the day-to-day of the role. To Solomon's point, if you're intellectually curious, I feel like it's a great role to be in because you're always learning something new. So it just scratched the itch that I had at the time.
And Alan and Jameson, I'll let you guys take this however you want it, but I guess more what's been the impetus that's made you guys want to stay in the industry for such a long time now, and how has that kind of evolved from what your original opinion of it was almost a decade ago?
Yeah, I'm happy to go first. So for me, what's kept me in growth has definitely been just the diversity of the types of questions you need to have answered. And so I'm also pretty intellectually curious. It's easy for me to get bored. And so going from sector to sector or thesis to thesis, trying to understand, competitive landscapes or market dynamics, or really what are the key questions for an individual business or underwrite, is pretty interesting. And honestly, just being social, it's a very social job, and getting to meet so many founders and management teams, and getting to go back and forth with them to understand their positions, but also their views on the spaces in which they work in, is pretty interesting as well. So those are probably the two main reasons why I've stayed in growth and venture.
Yeah, and then just to add on that, a lot of the reasons that I got into venture, folks have said, I think the intellectual curiosity, the ability to look at a bunch of different spaces at the same time, to form theses, all of that great stuff. The reason I stay in it is because we are living in the midst of a technological revolution, or several. One of the things that I look at to really understand, where opportunity is headed is cost curves. And so when the cost of storage dropped by 10x, we got AWS. When the cost of compute dropped by 10x, we got cloud compute. The cost of biology is dropping 10x. And so, I think that's one of the next big platforms we're going to see. Crypto, like there is so much happening in this world. And, it is, I think a lot of times it sort of feels inevitable. But one of the things that I've realized in venture is that it's not, and that innovation can come from a bunch of different places. And depending on where that innovation comes from, it fundamentally shapes the way that we live and work. And so I just think that, we're in the midst of multiple, probably technological revolutions, and venture is a great way to make sure that capital is going toward places that are going to use that technology responsibly and in inclusive ways.
Yeah. Totally agree. And when you guys first got your first job in venture or growth, what did you feel was the hardest thing to learn or the hardest thing to get caught up to speed on? And I'll just open it up for discussion. You guys can jump in whenever.
Sure, I'll jump in. I think coming from banking, it was a very just different pace environment. At Lazard, you kind of knew the processes you were owning, and it was very analytical, PowerPoint decks, and there was hierarchy. And then when I switched to venture, it was almost autonomous. Someone was like, okay, go diligence this thing, put together an investment memo. And if you have no prior experience, you kind of do feel a little overwhelmed. And after a few reps, I think you get into the hang of things. But I think that's probably the biggest adjustment for me. And then on a personal note, because everyone's always developing theses, you're never 100%. There's always risks, there are always unknowns. And I think coming from a place where you always have a giant amount of data and management projections and historicals, getting comfortable with that in terms of an analysis and kind of going to customers and doing kind of more unorthodox diligence was something I just had to learn as I kind of started my career.
Yeah, I mean, building off of what Solomon said there, toward the end, venture is fundamentally about the development of new theses and the development of new focus areas. And so I think, immediately getting into venture, it's very much about learning the basics, learning, a series of adages that no one invests in ed tech. There are no big exits in ed tech, or there's a bunch of stuff that you learn that initially, that then as you get more senior in your career, you start to question those assumptions, and you start to realize that value comes from places where people are not looking. And so when I got into venture, for example, I remember I had a friend of mine who was interviewing at other venture funds, got offers from great venture funds, and instead decided to go be VP of operations at Coinbase. I remember sitting there thinking my gosh, he is so smart and he's so accomplished. What is he doing going to Coinbase instead of going to a venture capital fund? And, if you look at our balance sheets now, you can clearly see that he made the right decision. And so, I think that technology is about and venture is about being in spaces that make you uncomfortable, being in spaces that look ridiculous, particularly if you're an early stage investor at first, and then seeing if, you do your homework well enough, you meet the right folks, those spaces actually turn into, massive markets where you can build real sustainable businesses.
Yeah, in addition to that, I'd say learning to build conviction was something that I had to get better at over time. I think in venture, unlike a lot of other jobs, there's an expectation that you always have a point of view, you always have an opinion on an individual business or sector, or even something much more specific, and going through the motions of learning how to get yourself to a place of confidence, especially when your opinion is contrary to maybe your boss's or someone else's, was probably the biggest adjustment.
Yeah, for me, it's all that goes on underneath the surface. So in college, I think they called this duck syndrome. People are furiously paddling to kind of do all these things that looks placid on the surface. So what I specifically mean by that is when I came into the role, I didn't know how many elements there were to becoming a full stack investor, I guess I'll call it. So what I mean is kind of as an investor, you're expected to help the companies with recruiting and with understand how to put together a good board deck, what SaaS metrics, if you're doing kind of enterprise software, SaaS companies should be going into those board decks to most efficiently convey the parts of the business and the KPIs that you care about. So I feel like I came in just kind of thinking, okay, you develop a thesis, you invest in the company, but there is so much more that I've had to learn, and particularly those relationships with like recruiters and other providers in the ecosystem that I didn't focus on building relationships, I would say, in my first 2 years, then have started to realize in kind of the second 2-ish years how important those relationships are. And then I would say the other thing is just around the discipline to do thesis development. I feel like there's so much going on in this world, to the point that a few people have made already, that it's really hard to take like a day every week or whatever it is for you to sit down and figure out how you're going to think about your personal thesis. So those would be my few things.
All great answers, and I agree with all the above there. As I think what's great about this group of the four of us too, or the four of you guys, is everyone's kind of at a different point in the life cycle, either in venture or growth. So a question to that would be, do you guys feel like there are certain prerequisites or foundational skills that you needed in order to be successful in your current role? And I guess starting with the early stage, Morgan, maybe we can start with you at In-Q-Tel.
Yes. So I feel like in my time in venture, I've met people from such a diversity of backgrounds and range of backgrounds. So I don't think there are any specific, like you need to do X or Y in your career prior, as a student prior. I think there are some personality traits, kind of like the willingness to talk to a bunch of different people, that kind of set people up for having high throughput in this industry. However, I've seen people that are super extroverted and super introverted figure out how to be successful in different ways. And like both characteristics have been set them up to be an awesome investor. I would say kind of from a financial analysis perspective, just to give you all kind of background into where I came in with that stuff. So I had very little background in financial analysis. I do earlier stage investing though. So kind of, I think of things through a filter of kind of team, traction, and technology. And those are the first things that I'll look at. And in that traction category, you do have many elements of understanding how a company's doing from a metrics perspective, but I am less focused on financial projections. And just candidly, that was a worry that I had coming into the industry, kind of thinking, oh, maybe I won't be up to speed on these things I need to understand to be a successful investor. But at the earliest stages is what I can speak to. That hasn't been the case.
Mm-hmm. Super helpful. And Solomon, I think if I'm categorizing this right, going upstream, you'd be next. But maybe it's helpful too to just preface it in the different stages that you're focused on before diving into what you think was necessary.
Yeah, so at Tusk, I would say the core focus was kind of seed, Series A, consumer, and at March, our main focus point is kind of the Series B and C, helping companies really scale once there's that product market fit. And from an analytical perspective, coming from banking, that hasn't changed. I just have a little more data to go off of and kind of, more meaningful retention analysis and cohort analysis that I can kind of do at this stage. But you really are still looking for, to Morgan's point, quality team, kind of what is the market opportunity ahead? And a lot of those bigger kind of questions. I think for me at the growth stage, that's what we're really looking for, because we want to put in $20-25 million at kind of the Series B or C to really scale this company, and then Alan will jump in because he's going to put in more money later. But I think that's what kind of I prefer from a personal perspective. And yeah, I think the analytical piece, I've always had it just because that's how I like to see the world. And in terms of an investment memo, it's just more filled out now than it kind of used to be. And the market right now is a little crazy. So there are some Series B deals that have no traction. So you're still going off of the same metrics Morgan did, a year ago.
Yeah, completely agree there. And Alan, I'll let you jump in next.
Yeah, so we write checks from 25 to a couple $100 million. So there's a big range there, but definitely later stage growth. Obviously, as you get later stage, to Solomon's point, there can be more just like financial analysis that you're doing in your diligence process. I'd agree with both what Morgan and Solomon said, that you're still thinking about some of the key non-financial metrics as some of the most important driving factors for your underwrite. I mean, I never took corporate finance or accounting. Like I've never taken a class still. It's not that hard. It's something that you can learn over time. And so I don't think it's a necessity to, even join a KKR growth to have done that in the past. We certainly have people on our team who haven't, and we're teaching them. It's just all about getting reps and getting exposure. And so I think what's more important is like the interest, the curiosity, and then some of these more financial skills aren't rocket science. You can definitely learn them.
Yeah, makes sense. And Jameson, maybe helpful too to just provide a little bit of context on Base 10's new growth fund.
Yeah, absolutely. I'm happy to do so. So Base 10, we just announced a $250 million growth fund. The growth fund is explicitly for the advancement of historically Black colleges and universities. In reaction to last summer, we did a bunch of work to sort of understand how can we directly affect racial inequality in the United States. And what we came back to, unsurprisingly within a capitalist framework, is that capital was the answer. So we thought about, okay, how can we effectively use venture capital to get capital to communities who need it? Started doing some digging and found that historically Black colleges and universities were this unbelievably leveraged way of actually getting capital to communities that need it, that can put it to productive use, and that have historically lacked access to it for a host of reasons, including systemic racism. So the way that our fund works is that we make small investments in late stage companies. Typically, we are a $20 million check out of several $100 million that a company is raising. So, we're investors in companies like Attentive, Brex, Circle CI, Wealthsimple in their most recent rounds. And then we donate 50% of our carry back to the historically Black colleges and universities that we partner with. And so the idea is that if the fund returns at 3x, the HBCUs in our fund actually would receive 8x on the capital that they put in, because we're donating 50% of our carry. And it's our hope that we can start to narrow the massive gap that exists between HBCUs and non-HBCUs in terms of endowment. And that gap truly is massive. And just to give you a sense for it, HBCUs have on average $15,000 per student in their endowment. Non-HBCUs that are sort of comparable, so exclude the outliers, the Harvards and the Stanfords of the world, have $410,000. So that is a 30x difference. That 30x difference is felt, in a very profound way across the entire campus in terms of lab resources, libraries, career resources, and the like. And so, anyway, that's the sort of fund that we're working on. And in terms of my perspective on venture capitalists and what the right background is, great venture capitalists come from everywhere. Mike Moritz, one of the greatest venture capitalists of his generation, was a journalist. Bill Gurley was a research analyst. Folks come from everywhere. I think a few years ago, when Andreessen came on the scene, there was this sort of bloom of people saying, oh, you had to have this long operating career in order to be a great GP. And even Andreessen has backtracked on that. Now, if you look at their GP roster, they're GPs who have been career investors. And I think it's just proof positive that, there's no sort of template for a great investor. The thing that matters is someone who is insatiably curious and who knows how to ask good questions and who knows how to figure out where opportunity is. And that's what journalists do. That's what research analysts do. That's what a whole bunch of people on this planet do. And that's why, all of that is great preparation for venture.
Yeah, completely agree with everything you guys said. And the one thing I would add too is it's definitely important to be a good judge of character. It's never underestimate how important a founder is to the business and to scaling both their business and providing both value add to their employees, to their customers, and to you as investors. And that's something you definitely learn with over time after doing a ton of meetings with different people. But it's one that I think is very, very valuable too. So doing diligence and analysis and decks are obviously super important to doing the day-to-day job. But another piece I think, or I found to be pretty important, is presenting and explaining the investment opportunity in a very clear and concise manner, which I think is something that really coalesces into you being a good venture or growth investor over time. And I'd be curious to know how you guys improved on explaining or presenting information, and if there's been any key resources or habits you've trained or developed that have made you get better at this.
I'm happy to kick it off. Venture is a business about outliers. And so we are not looking to find, 95% of businesses in the United States never raise venture capital and are not a great fit for our model, because venture capital is really about funding businesses that can reach venture scale. And so, $1 billion in enterprise value within a few years. And there's just a very, 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 very select, number of businesses that actually have the physics to be able to do that. And so venture is about explaining outliers. And so as you think about the companies that you are interested in and the companies as you're explaining them to your partner, focus on that. There are a lot of great businesses to be built. There are a lot of great businesses out there that are just not a great fit for venture for a bunch of different reasons, and largely because they can't be venture scale. And so the thing that I always focus people or coach folks to focus on is really like, what makes this business special? And when I say special, it typically means, technological innovation, meaning business model innovation. It's innovation on several different vectors. And so make the case to me that this is a super special business that, hey, it may work, it may not work. Like I care less about that. The thing that I care about is that if it works, it'll be a massive, massive business.
Yeah, Jameson is 100% right on that. I think what I always try to do and what I tell my team to do is, like, first, can you explain the business in 1 to 2 sentences? Just what the business does very clearly in layman's terms. And if you can't do that yet, then you need to synthesize your thoughts before you can move on to like, how do you explain your thesis? Then from a thesis perspective, I always try to do 3 to 5 strengths, 3 to 5 risks or considerations. These are the things that actually move the needle, right? That get you that outperformance or that will cause the business not to do well over time, and really just try to focus on what moves the needle versus, trying to boil the ocean at all times, and be really concise in the way in which you explain things.
Yeah, and I totally agree with that. Like explaining it in a sentence or two, I feel like is key. And I feel like I've had to very much hit the ground running with this skill. Didn't realize how hard it would be to hone, but just for background and context, In-Q-Tel is the strategic investment arm of the intelligence community. So I feel like I came in, tried to understand the world of enterprise software, which is very complex, and then also the government world. So I feel like I'm often translating between government to tech, and then also trying to understand the enterprise software technologies, and then translate those to kind of the partnership or just into written form. And I was actually going to write more about this kind of via newsletter, because I was realizing how critical the skill of explaining the ability to translate something into layman's terms really is in this role. And I have this one friend who I'll go to him and say, hey, I just learned about this company, and he'll explain the technology to me in depth, but at a tangible level. And it's always shocking to me. And I think he spends a lot of time talking to practitioners, the people that are using the technologies that we invest in, has his thesis as well, and is able to distill down. But it's interesting. I feel like there are multiple layers and ways that you can communicate this way. So if you're visual, you can communicate visually, or something I've been experimenting with is like communicating complex technologies in analogies. So like if I can't put it into layman's terms, or if I can't put it into an analogy, just something I've been like trying to use tools to convey things more effectively to the team and to myself. So.
Yeah, I think everyone really hit it. Just to tie what Alan and Jameson said, venture is a business of outliers, and it's really all around 2 or 3 core assumptions that you have to believe. Like, I think in other areas of finance, you're doing financial engineering where you're baking in a lot of assumptions. But if you have more than that, in my opinion, either you don't fully understand the levers of the business, or it's just a business that, you know, might not be a traditional venture kind of play. But it really is just a handful of things that are going to drive a meaningful exit, and being able to clearly articulate that, like in an exec sum. Like you should be able to read an exec sum in a memo and then be in pretty good standing in terms of understanding the business at a high level. And, you know, now that most of the people here are in venture or want to get into venture, that's what, when you're going to IC, oftentimes a lot of people will read the first page to really get an understanding and then just start asking you questions. Because if you have a 25-page memo, sometimes it's just a lot to digest. So I think that idea of being really concise is important in kind of all aspects of the job.
Completely agree, and very good points. I think I'd like to switch gears really quick here to touch a little bit more on the outward bound stuff. It's not as much internal, but one huge aspect too is, for a lot of our roles, is sourcing. So I'd be curious to just quickly touch on how you guys have thought about sourcing new opportunities, since it's a very pivotal part of the job, both on the venture side and on the growth side. And Morgan, I guess we can work our way upwards just like we did earlier.
Yeah. So for me, it's one of two motions. I guess it's very like top down or very bottoms up. So like from a top down perspective, I will create a thesis in an area. I'll make an Excel spreadsheet of the interesting companies I come across in the area. And often when I'm talking to entrepreneurs, if you ask who are your competitors or who else is in this market, you'll get more companies that are in similar tangential markets to the companies. So that is kind of the thematic approach that I take. And then in the meantime, and in the background in this role, I've found it to be valuable to constantly be talking to people and to be reading. So I follow a lot of newsletters. I'm not on Twitter, but I feel like sometimes I like end up on there through different sorts of research. So I feel like the bottoms up approach is more of understanding what's out there through newsletters, through Twitter threads, kind of the grassroots conversations about new and different technologies. So that's my approach.
And then I'll go next, just to follow that spectrum. I think all of that makes perfect sense, and things we look at. I think when you get into growth, you get the added benefit of working with earlier stage investments and basically being able to look at their portfolio. In terms of kind of success, for me, it's usually been pretty thematic. And if I hear about an exciting company, it also informs a new thesis that I may have just missed. And like going like fairly deep. So like, you know, just fintech is not like a thesis. Like you kind of go in further on kind of the CFO suite or like treasury services or something like that, where you can kind of dig in a little deeper. And then you kind of the landscape, and as Morgan said, when you're meeting with a founder, you end up learning way more than anything on the industry side, just in terms of getting a competitive landscape. And that's really how I kind of approach it. And then from a network perspective, you have your founders, you have your other investors, and then I always find it useful to have some industry contacts. They usually, especially people that do partnerships at startups, are a great source of just not necessarily deal flow, but ideas of, oh, have you heard about this interesting thing? And sometimes that's underappreciated.
Honestly, I think Solomon and Morgan hit the most ways that I think about sourcing. I would stress the network aspect. Having authentic, relationships with other investors is extremely helpful. Mostly because they can basically make the process a lot more efficient, right? They know how their companies are doing. They can give you a heads up a year in advance, if not more, that you should be tracking something. And so in addition to that, thematic work is pretty helpful. And then try to find ways to be, bidirectionally helpful. So when you come across businesses that might be too early for you or might not fit your fund's thesis, like share them with those contacts and keep, a monthly, if not more frequent conversation going with a handful of people who you can share, deals back and forth with.
Mm-hmm. And to double click on that, Jameson, maybe you can hit on this first too, is how have you guys gone about network development? And what do you really feel is like the most important way to build it?
Yeah, absolutely. You've got to find your tribe, and your venture tribe is typically a small group of people who would go to the bat for you. And so that means calling up an entrepreneur who you're trying to win, and explaining exactly why to that entrepreneur they should choose you. And there'll be other investors, there'll be founders, but it actually won't be a big, list of people. And I think initially when you're in your venture career, it's great to be out there going to, venture events, meeting as many people as you can. You're going to find people that you click with, people who you don't. The people you click with, follow them and be helpful to them. Exactly everything that Alan was saying, make sure that it's a bi-directional relationship, make sure that it's an authentic relationship, and that will take you further than anything else. Certainly I think like in the company discovery process, like all of that domain expertise and understanding the business, like all that is crucial. At the end of the day, founders are making a very human decision, and it is, I want this person on my board or not. And they will, as we all do in important decisions, use a lot of social signal. And so reach out to people that they know and they respect, and ask them whether or not Jameson, is a good board member, is a good guy to have around. And so make sure that you've got 10 people who you can call, and have them within 24 hours, do anything that you'd like for them. Because that's really, the weak links, the venture capitalists who you catch up with once a quarter, they will send you every crappy deal in their pipeline. And, God bless them. But like, if you want the really good stuff, and again, this is an industry of outliers, if you want the really good stuff, you've got to have real relationships.
And to that point too, I mean, you guys can, Alan, I'll let you jump in. How big do you guys think your network should be? Your core network that you really talk to on a weekly, bi-weekly basis, or even daily?
I would say 5 to 10. Obviously, everyone has much larger networks, right, that they can access if it's in an individual sector or industry, but it's hard to actually maintain contact and like good relationships with more than a handful or two of people at one time. So to Jameson's point, like find your tribe and, be really invested in that. And the one other thing I'd add is I think, especially when you're first starting out, there's sometimes like a focus of starting to network with people who are really senior at other places, which obviously can be helpful, but I also wouldn't undervalue the importance of networking with your peers, right? Over time, these are the same people who will be very senior. They also have, it's the same access to information about these companies, right? And might be more willing to get on a phone or even share information with you. And so I've always found that, I guess now looking back, I'm very happy that I invested in, a lot of peer networking as well, because that's served me very well over time as I've gotten more senior, and my peer group has as well.
Yeah, and to that point, my disposition initially coming in was just to make friends in the industry. Like I was just very focused on like identifying people who I could laugh and hang out with. And then as those people grew in their careers, interestingly, some like became entrepreneurs. And then now a few, my reference point is I started as an associate, and some our principals are already partners at like different firms. So it's been an interesting evolution to see all of that happen so quickly over the last just handful of years. And then what everyone said about like sending people deals, I've started just calling that like the flywheel of good rapport. And I'm like very focused on pouring a lot of energy into building the flywheel of good rapport. So like if someone's recruiting, especially someone from the Black VC community that I know well, I will be sending their resume to people that I know have open roles. So like that's one way. And then obviously sending deals to other investors and just making sure those deals are high quality and that you're not the one sending the crappy deals to other people, I think is important as well.
Yeah, I think everyone hit it. In venture, your reputation is everything. And whether, people move shops, become founders, but that's something that always sticks with you. And everyone's going to reference check you, whether formally or off sheet, and whatever people say about you is kind of what will enable you to get to the best deals, essentially.
Do you guys think having domain expertise is important to creating differentiation internally or even externally to get inbound lead generation from some of your peers you work with at other VC funds, knowing that you do supply chain and logistics or cybersecurity?
Yeah, it's important to have a calling card. Like I sit down with so many investors and I say, oh, what kind of things are you interested in? What should I be sending your way? And they say, oh, I love SaaS, I love fintech, and it's like, okay, like you're never going to be top of mind when I'm trying to then do, unaided recall in terms of like, oh, I've got this interesting fintech deal. Who am I going to send this to? Like, am I going to send it to the guy who has, doubled down in fintech and has a really interesting thesis and like has talked to me about, ACH payments before, and this is a deal that has to do with ACH payments? Or am I going to send it to the person who, likes SaaS and likes fintech and thinks that, financial products are moving to software? Like, that's just completely uninteresting. Now, I think there were actually, sort of two questions in your question. The first being, you need to have a calling card. You need to have some sort of thing that means that when I meet a founder who would be, great for you to invest in, I remember you first and I send you that deal first. The second thing though, around domain expertise, like make sure it's a real domain that you can have expertise in. Like no one has domain expertise in SaaS anymore. All of the things that we know about SaaS companies are published, the Cloud 100 by Bessemer, like it is all the metrics that we look at, like they're very well understood businesses. We've been investing in them for 20 years. No one, has domain expertise in SaaS anymore. Crypto, life sciences, some of these, more frontier fields, I think you can actually build domain expertise. And I think it's hard for, a general purpose technology investor like myself to then come behind you and say like, oh, actually I should win this life sciences deal because, I understand the science. And so there are places you can build real domain expertise. They are not in the places I think that people think that they are. And also they change all the time. In 10 years, if crypto continues to be a sustaining theme, every investor will know, what a good crypto company looks like, what the acquisition landscape looks like, what you need to go public, all of these other things. It'll be a well understood space. At that point, then domain expertise doesn't matter anymore. And so if domain expertise is going to be your calling card, make sure it's a domain in which you can actually build differentiated expertise and you're not just regurgitating CAC ratio or whatever you read in the latest kind of Bessemer report.
It's also okay for your domain. I think your domain should change over time, right? Like the world is changing, things will become, past your stage of investment. And so I agree with Jameson. If you're going to spend time in an area, it should be pretty specific. Like I spent a bunch of time in consumer insurance distribution and like how that became digital, specifically around, Medicare supplement, Medicare Advantage, life insurance, home and auto. Like that was a thesis, but it wasn't, I'm going to chase down everything in fintech or I'm going to chase down everything in even insurtech. And so I think it's possible to build, specific knowledge and expertise in those areas, but it probably should be pretty specific. And then to the other portion of your question around, should you do it internally? Look, I think it can be helpful to become the go-to person for a subsector within, your organization. And you can do that by getting to all the companies, having real theses and an understanding of, the competitive landscape, so that if something goes live or comes in, whether you source it or not, you're the person that people will go to bring onto the team to do that diligence, get the deals done. I think it's a great way to show value to the broader team. And it makes you a trusted source of information, but also you want people to trust your business judgment. And at least for me, the easiest way to build judgment and perspectives in areas is to be pretty focused. So you can go deeper in that space, talk to everyone, and have real points of view.
Yeah, and Alan, that dovetails, I think, with what you were saying earlier, just about having conviction in something. I feel like I've seen a number of people be successful in this. Like one in my own firm came into the firm and looked at the areas everyone was focusing on, understood those areas over the course of a year, then said, no one's focusing on X and Y. I'm going to go crush it in those areas and understand everything there is to understand and make maybe a portfolio of investments just in that specific area. And he has gone about doing that. And then I've seen people at other firms kind of that go in and say, I'm obsessed with space tech and I'm going to only invest in companies in this space. And then, like, to your point, when the market's kind of, when they've seen many of the companies in the market and made a few investments, maybe they'll move on to the next thing. But to me, I feel like it's an incredibly valuable approach and takes a lot of discipline. And that's something I think junior people struggle with. I have struggled with this a ton. I feel like I've talked to many others who just struggle with not boiling the ocean when you're trying to develop a thesis and find an area, but also when the partners you're working with / for are also asking you to work on their deal. So it's a fine line.
Yeah, I think everyone hit the big points from a career development perspective at one shop specifically, especially if it's at the early stage. I do think it helps to be the point person on something, because someone knows, I'm just going to send it to Alan because it's an insurance. And although it's vague, I do think it helps you. And to Morgan's point on like space tech, like, March doesn't really do space tech. So you also want to align the deals that you're interested in with the deals that will actually get done, just from a career advancement perspective. And industries will come in and out of favor very quickly, but as long as you're kind of in the sector that people are deploying capital into, you're kind of on the right track is my take.
Yeah, completely agree with everything you guys said. And I think one other question I had for you guys, and I'll start mixing in questions from people in the chat as well. But as part of the discovery process is being able to disaggregate things that you're doing for your firm that are value add, and also things that you're doing for your own personal development. So I'd be curious to understand when or how did you guys start thinking about personal development or brand in order to help you at your current firm, or ideally building yourself in a way that might be more beneficial for wherever you go next?
I think it's something people are always thinking about. I feel like early on, I was just focused on finding an area and networking with people in that area. So my brand in my identity was defined a little bit by that in venture. In subsequent years, it has evolved to, well, I saw this in the questions too, like I have a newsletter and I actually use that to write about things that I don't do at work because I want to be able to think things through via writing and share those in my newsletter. And then communities, I feel like, have also really become a defining part of my personal brand. Like I spend a ton of time with two groups, Black VC and EVCA, and just, I mean, this saying is super common. Like, you can always be busy in this industry, but it's really challenging to be productive. So I feel like thoughtfully considering, okay, I want to spend my time writing. I want to spend my time with X and Y communities. These are the important things to me. And then at some point you hit a limit and you don't have enough hours in the day. So I've been a little bit more thoughtful about how I place my time in these different outside activities. And I feel like that has been helpful to the firm in the last few years as well.
Yeah, I think, and just to hit on Jameson's point on reputation, I always think as a venture investor, your references and then what founders in your portfolio and founders, in the ecosystem say about you is everything. So if you're looking to go into a different venture role, those are the people that people will be calling in addition to other investors. And it kind of comes down to personality type as well. I think, like, for me, I am not the most like extroverted person. So I kind of do more meaningful, fewer relationships, get to know people, work with, organizations like Black VC that are important to me, and build my brand network that way. And then some people want to do, there's also the other approach of you can be more outward facing and community driven. But I think you got to figure out what works for you. And I believe you have to get out of your comfort zone, but people only do that to some extent. So it ends up being a pretty personal decision. Because I think you can be successful both ways. Like, you don't have to only be like, you don't have to have your face in the media to really like accelerate your venture career. I think some element is needed, but some people overstate it, in my opinion.
Alan, go ahead. I wanted to hear what you wanted to say.
Look, I think especially as you get to growth and later stage, there's less of a, personal brand necessarily that you see to the same extent that you see in VC. That said, I think it can still be extremely helpful. I think what's most important is, one, your reputation within your networks. And then two, if you're going to do some sort of external thing like a newsletter or, you're going to start tweeting often or something else, it's just very important to have like an actually differentiated point of view, especially if you're starting from a base where you're not really well known. So choose an area that you know well, that you hopefully know better than others, that also feels different. Because there is already just like so much content, right? There are so many podcasts, there are so many newsletters, there are so many people who have built brands in this way. And so if you're gonna do it, make sure that you're gonna get a return on it. And I think the best way to do that is by talking about something that other people aren't, which is hard when there's so many people, talking all the time.
Totally. I mean, look, I think it's the more differentiated you are, the more valuable you are. Like, as simple as that. And I think that matters less at the growth stage, but then competition is harder at the growth stage for the deals that you want. And because you are less differentiated, either as an individual investor or as a firm. So I think that, just find what authentically makes you interesting, what makes you special, lean into that, regardless of what stage you're at. And the more that you lean into that, the more differentiated you are, the more differentiated of a network or a knowledge base that you have, the more gains you're gonna capture. I mean, I see cases all the time of, absolutely killer companies who get term sheets from a bunch of different places at very high prices and will take a lower term sheet because they want that specific investor or they want that specific firm. It happens all the time. Like, there are firms that will, go to companies and say, we will literally give you a term sheet at whatever price that you'd like, and still get turned down because they just don't bring very much to the table other than capital and maybe speed of decision. So, figure out what makes you different, lean into it aggressively, and do it in an authentic way. And the more that you can do that, the more valuable you'll be.
Yeah, all great answers. And I'll start jumping into a few of the questions now too. And one that's very tangential to the conversation we've had for the past 10 minutes is around network development. And this question is stating, how have you navigated finding mentors external to your firm? And in the same vein, in an effort to create bi-directional relationships, how have you added value to your prospective mentors without making the conversation feel so redundant? AKA, how have you looked at this company? What about this company? What about this one in every meeting that you do on a weekly or bi-monthly basis?
Yeah, I'm happy to take a shot at that question. So, it starts out that way, right? Like, it starts out, hey, we're connecting over a specific company or a specific thesis area. We're introduced by a few folks, but then, like, it's like any other relationship, right? You feel a connection or you don't. And if you feel a connection, that other person probably feels a connection also. And so, you can keep going back to them. And maybe at first, it starts as a pretty transactional relationship. And it's like, oh, what's your thought on, hey, we looked at this company together. What's your thought on this related company? But eventually, it morphs into hopefully something that just feels like an actual relationship. And mentor-mentee relationship. And, there's no science to it. It's a lot, I think, of intuition. It's a lot of feeling people out and seeing, does this person actually seem interested in me as a human being? Or are they interested in sort of getting, extracting as much as they can from me on this phone call and then never seeing me again? Like, after a while, it becomes pretty obvious. But I'll say this, good mentors are few and far between. You will see, you will feel when someone is genuinely interested in mentoring you. And if you feel sort of that person, if you feel a connection with that person, like, don't be shy about pursuing it, right? The worst thing that anyone can tell you is no. And so, like, if you're in, if they're in New York and you're in San Francisco, and when you're in New York, you shoot them a note and you say, hey, I'd love to catch up and grab a drink, and they're super responsive and excited, like, that's a great signal, and you should pursue that. Versus it's the person who takes weeks to respond to your email, or like can never seem to find the time to actually meet up with you, then like you have your answer. But meet a bunch of people, pay attention to who you feel connected to, and for the folks that you feel connected to, follow up.
Yeah, I would agree with that. For me, it's always been very organic. And I will say I kind of take the personal board of advisors approach. So by that, kind of saying that I meet a ton of people that all have strengths in different areas. So I don't actually have like one person that I always go for everything. I always go to for advice on everything. I have one person that I go to for advice on how to be a good board observer or board member. And I have another person that I go to for advice on another element of my life. So I feel like for me, it's more of an aggregate approach where I've met a bunch of people over time, build solid relationships with them, and then also am able to distribute my questions and concerns to different people and not just one.
The only thing I'd add is, especially if you've moved firms, your old firm can often be a great place to find mentors. It's very hard to just organically create a mentor, like a true mentor, if you haven't worked together or done deals together, done something together. And so, if you're on your second job in VC, like, think through the partners you worked with and try to maintain, but also develop a deeper connection. And that's been really helpful for me. For instance, in who I consider to be my external mentors, I used to work with them as, their analysts or associates. And now I'm at a different firm, but, we share ideas, they understand how I think, and they can also help me navigate, different things, both internally and externally. That's been super helpful. But to Jameson's point, it's really hard to find mentors that are good. And I think it's even more difficult to just like organically have a really close relationship with someone who you like met at a networking event.
Mm-hmm. I'll just really stress Alan's point on the don't forget your previous firm. I'm still very close with the partners at Tusk, and it's almost like now that you don't work there, one, they already know you, but there's also less bias, so you can just have a real conversation without kind of your traditional, you're here, and like when you're at the same firm, there's just politics and confusion that can come up. And I just really work on expanding that, ask for like the critical feedback that you didn't really ask while you were there. And I think it just takes time. I think sometimes people think, I've known this person for a year or two, and that they're gonna like, I think some relationship takes five years to really like mature, and then you ask for that one favor, or they kind of send you that one opportunity. So it's just really important to have a longer term approach. I think sometimes we get caught up in that shorter term, oh, I'm looking to get promoted or this job or et cetera. So
yeah, completely agree. Oh, well, I think there's obviously a ton more questions, and I'll shoot my email to everyone in this chat if you guys want to ask me directly too, and I'll follow up. But I want to give a huge thank you to Jameson, Morgan, Alan, and Solomon for joining and discussing their opinions on all of these topics. I hope I found it extremely informative for myself, and I hope each and every one of you also found it informative. And we look forward to doing something like this in the near future too. And if we can be helpful in any capacity to help you break into a role or help you kind of succeed thereafter once you're in it, please do reach out. We always want to be helpful resources. All right. Well, thanks guys, and thank you all. And hopefully we see each other in person soon enough too. While the world is opening up, and hope everyone who's in the chat that knows each other gets to see each other too. All right.
Thanks.
Okay, bye guys.